Despite a holiday shortened week in the US this week, the Nasdaq 100 has moved a lot over the past 4 days and mainly in one direction, down. The week kicked off where the previous week left off, with the market worried about further rate hikes as US inflation came in higher than expected. Yields rose on Tuesday to start the week, and you can see here in this chart the continuation of this inverse relationship between the Nasdaq 100 and the 10-year yield. Additionally, retail earnings missed analysts' expectations, with both Home Depot missing on revenue estimates for the first time since 2019, and Walmart sounding the alarm bell that 2023 will be a slow year for the retailer. This comes back to rising rates. If rates remain higher for longer, people spend more money on interest payments and mortgage payments, and that leaves less money to spend in the shops, which is why both Home Depot and Walmart are cautious for the remainder of the year. Wednesday was much of the same, with Fed minutes just reiterating the message of what the Fed officials continued to say, that they remain committed to bringing down inflation by raising rates further, and that has really rattled equities. You can see in this chart why that is exactly. The terminal rate has been increasing since the start of the month, with the terminal rate well over 5% now. On the same day, Fed official Bullard comes out and projects the top end of the Fed funds rate to be around 5.4%, which is almost in line with where market is currently pricing rates to be at. Despite this, price held the 200-day exponential moving average just above the 12K mark, and this is thanks to Nvidia, which helped the Nasdaq 100. Despite only a slight beat in earnings, the prospects of benefiting from the AI revolution saw the stock jump, as you can see here from the Nvidia hourly chart. The Nasdaq 100 continued to hold on to the 200-day EMA on Thursday, but Friday proved to be a big blow. First, with German Q4 GDP revised lower to minus 0.4% from minus 0.2%, so the risk of recession is getting real, as another negative quarter would tip Germany into recession. This was followed by the core PCE report, which is the Fed's preferred measure of inflation, which came in above analyst estimates at 0.6% month on month, when 0.5% was expected. That saw stocks slide lower, with the Nasdaq 100 now backtesting the area price broke above at the start of the month. I mentioned this in my last video, and here we are. The 200-day is 20 points lower at 11,881 and is a must-hold level. Similarly, a quick look at the S&P 500, we are right on it again, the 200-day moving average at 3,940. If both the Nasdaq 100 and the S&P 500 hold their respective 200-day moving averages, this would successfully retest the breakout from the start of this month. Looking closely at the Nasdaq 100 daily chart, 11,881 is the support level. If we lose this, the whole move in Feb above this downtrend was just the mother of all fakeouts, and we could end up back in the territory from last year in January this year, with the old levels coming back into play, 11,680 and 11,480. But first, all eyes on the 200-day moving average to see how stocks close out this week. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.